the CEO of KushCo Holdings, KSHB. Am I right?
Yes,
KSHB.
sir. You got it.
And Nick has, I mean, how many articles? There was so much news from you guys in the beginning of this year, man. You have been insanely busy, I bet.
We just, for once, got some tailwinds behind us. And after fighting headwinds for 18 months, that sure feels good. And we took advantage of it. So we raised $40 million. We executed a merger agreement with Greenlane, bringing together two of the largest ancillary companies under one roof. And we're super excited for that deal to close later this year after we get through necessary approvals.
That's exciting, man. That's exciting. Well, and I've been following, right? So you raised the 40 mil, you paid off, what was it, like 17 million in debt, right? And then this merger comes, right? Or maybe those last two were reversed in terms of order. But tell us more about how the merger came to be, right? And Greenlane, GNLN, I think, for those of you in the chat. But tell us how this merger came about. Tell us, what prompted it, why you thought, like, hey, if we're going to do this, this is the company to do it with.
Yeah, absolutely. And I've known the Greenlane guys for a long time. So you could say this is several years in the making, various talks and ideas here and there. And ultimately, we had a little run a year ago where we were kind of seriously considering, and then, COVID hit and that kind of blew things up. So, we got back together, seriously starting talking about this toward the end of last calendar year. We just think it makes sense, and people have agreed with that. That's the general sentiment that we've heard too, is it just makes sense. Both of our companies, need a little bit more scale to kind of get to that meaningful profitability and EBITDA standpoint, right? And putting them together, we get that scale overnight, obviously. We also have really very different businesses. People do look at us as competitors, but there's small overlap of where we actually compete. The vast majority of our businesses are different. And so it thereby diversifies the pro forma company into a really wide range of not only customers, but also products and geographic markets. As you guys know, Greenlane has a significant presence in Europe. So we're talking about getting global with this deal as well. So it de-risks the business, it diversifies the business, it puts us in a position where we can now be listed on NASDAQ under the Greenlane symbol, GNLN, as you mentioned. And that's been a goal of KushCo for quite some time now. So we're pleased to be set up to achieve that as well and give more investors access to this company. And I think a lot of institutional investors want access to U.S. MSOs, but obviously can't get that via the major exchanges. But now they can play a proxy through Greenlane/KushCo. Why? Because those are our major clients. And so if they're going to continue to do well in the industry, which we all expect, they're going to continue to buy more things from KushCo, and thereby an institutional investor can buy a NASDAQ listed stock in Greenlane and get that exposure that they're really wanting to have at this stage by investing in a company that's fully federally legal and listed on the major exchange.
Oh, that's huge.
Honestly, it's interesting you mentioned the reaction of people. Like, this makes sense. It's what most people said around this, right? If I had to name, the five ancillary companies, both KushCo and Greenlane are on that list, in everyone's list there. So it's cool to see a merger that makes sense, and as you say, very little overlap. Now, one thing you say, and I agree, this is a proxy play, right? But what kind of incentive does a big MSO have to not do many of the things they buy from you themselves in the near future, right? Why? Let's take the example of packaging, right? Why would they not make their own packaging?
Yeah, look, I think, just generally the trends over the last, couple decades have favored companies looking to be more horizontal than vertical. We know that vertical integration is actually a trend in cannabis, and that's out of necessity, right? A lot of states require it. But for the most part, I think, people have realized it's not efficient to try to create everything in-house, especially if it's not within your core competency. And you think about the products that we sell. So you mentioned packaging. packaging, if you look at the global cannabis spend, right, the retail consumer spend, the packaging equates to around 1% of that, right? So you have these companies that are competing for this massive $20 billion market. It's going to $50 billion. And this is where their focus is. And now you're suggesting that they should take their focus off of that and go and get really vertical and deep into packaging, which represents less than 1% of that total addressable opportunity. It just doesn't make sense. Now, will companies do that? Yeah, at times companies have said, hey, look, we can look to maybe bring some of this in-house, go more direct. And that's where a lot of misconception is just around the cannabis industry, right? So if you compare this to alcohol or wine, look at the wines that you buy. 99% of them are in the exact same bottle. If you buy beer, a vast majority of it is in a can or a similar bottle. That is not the case for cannabis. So you take these companies that may look very large at the face, but really they only have that type of scale, if they do at all, on one or maybe two of their product lines. But there's 16, 17, 25 different things that they need to buy, because they need syringes, they need concentrate containers, they need small jars, they need big jars, they need joint tubes, they need vape packaging. And so they aren't going to have the scale on all of those. So we see that some companies, if they choose to go more vertical or go direct, so to speak, doing that on a few items, but certainly not the aggregate. And then, of course, the way that you ultimately secure your position is through intellectual property, of which we announced the combined company will have over 200 articles of IP, and also through contracts. And that's been a big focus of KushCo. We announced a fifth large supply contract with a leading vape operator on the West Coast, on top of announcing just recently a contract with one of the top 5 largest publicly traded MSOs. So getting these companies into contracts makes it sticky. Having them use products with embedded intellectual property, well, of course, they can't take that anywhere else, right? It has to be manufactured through KushCo and KushCo's affiliated factories, right? So we're doing a lot of things to position ourselves, and people think, oh, well, what's the barrier to entry? It's actually very big. And every single day we're working to make it even that much harder, because we know that eventually, everybody wants to rush into the space. There's big packaging companies already in the space, but they're not finding success. And so we intend to now use our success to block them out, so that even later down the road, when it's better set up for them to find success, we're in a position where we're not going to allow that.
Well, and that itself is really interesting to me. And we've got a question in the chat, Nick, that I want to send your way. But this move to sort of individualized experiences that come with particular packaging for a specific brand or company, right? Apple has done it for a long period of time. You see it in Shinola and all these other different companies and how they package their products that is unique to them, right? Obviously, everybody doing that to scale on their own would be nigh on impossible, right? For all of the SKUs in their product lines, right? Especially those larger companies. But here's an interesting question, right? We're seeing more questions like this come across lately. At Benzinga, can KushCo do packaging for other industries, maybe pharma, or is there mainly a focus on the cannabis market looking forward? Now, obviously, we know you've been one of the OGs in the space, Nick, right? You've been around for a long time. So, and cannabis has been the focus for you, but are there designs to branch out? Are you guys looking at any of that? What can you tell us there?
Yeah, I mean, look, our focus is on cannabis, and it will continue to be on cannabis. We think it is very unique. We think there's a reason why companies like KushCo and, quite frankly, other private cannabis-focused companies are winning today, whereas the big players like Berlin Packaging and Berry Plastics that have announced that they're in cannabis are not seeing that traction yet, right? We think there's a reason, a competitive advantage. And so we want to take advantage of that opportunity when the timing is now, right? It's a huge macro tailwind environment. We have more states legalizing. And so we've got our work ahead of us just with this market alone. Now, in the process of doing what we do in the cannabis market, we're going to continue to innovate and build out intellectual property. Some of that may very well be applicable to other industries, and there may be a time where we do expand out. But for now, our sights are focused on the cannabis and CBD markets. And now through the merger with Greenlane, we're not just talking packaging. We're not talking just the traditional vape products that KushCo sold, but everything that Greenlane has, these are CPG goods, right? We look at vapor.com, for example, where they have, just a wide array of consumer products for purchase. And, they're talking about building more and more company-owned brands. So another knock, I guess, on KushCo has traditionally been it's a lower margin business. And in fact, we're behind the scenes building brands for others. Well, not anymore, right? With this merger with Greenlane, we have the opportunity to build our own brands on the ancillary side that will complement a lot of the customers that we service, but gives us access to a global consumer base, right? Because you can ship these products around the world, and it comes with higher margins. So we can actually now expand the margin ceiling that was in place before. It was around 25, maybe 30%. We can now take that much higher. So our valuation, where we've been traditionally valued on low multiples because of the lower margin, that has an opportunity now to tick up. And if you look at our company, our valuation is extremely low compared to other cannabis companies, right? We're trading at, we announced, last year, 250 million as a pro forma company on last calendar year. And the combined market caps aren't even at the $500 million mark, right? And so that's for a high growth industry and for two pioneering companies, especially one listed on NASDAQ. You just don't see those type of valuations out there. You guys do this every day, so you could certainly agree with me.
Yeah, when I reported on the merger, I saw the number, for the value of the combined company. I was like, for real? Am I missing? Like, I had to go and check on Google, Yahoo Finance, Bloomberg, just like cross-checking the valuations, seeing if they were like maybe missing the market cap in Canada or something. It's crazy. Now, you were talking about going a little bit, or maintaining the focus and not going into pharmaceuticals for now. And that makes sense to me. But at the same time, part of my thesis around ancillary companies and cannabis companies in general, revolves around their possibility to go beyond cannabis. That is something you can do in the future. In the meantime, have you considered, for instance, licensing some of your IP to pharma packaging producers? I mean, is licensing part of your business model, considering you're developing so much IP that may be obsolete by the time you decide to get
Good question.
Pharma? I mean,
yeah, no, it's not part of the model today, but it very well could be in the near future. We're having conversations now, along the likes of this, people looking to expand, the presence, expand it not only to other geographies, but also to other industries. So yeah, that would certainly be a better way to do it, in my opinion, not tying up our own capital, because again, we've got so much growth in our own industry. We need to conserve our resources to focus on that, but licensing can give you best of both worlds. And we've set up recently at Kush some reoccurring revenue streams that don't require any CapEx investments, right? So for example, our arrangement on the CBD brokerage, we've created placements where we now get a percentage of wholesale sales on a go-forward basis for the work that we've done. That's just reoccurring 100% gross margin revenue that's coming in. We're doing the same thing now with terpenes. We partnered with Abstracts. We've shifted our model to basically create a fee. We want to do a lot of things, and we've realized, right, it takes capital. And so we have to use our capital wisely on the areas that are within core focus, but structuring things in a more creative manner to be able to extract value without tying up resources. That's going to be a continued strategy of KushCo and the combined company.
Yeah, makes sense. There's a saying, I'll let you go in a second. There's a saying in Spanish that I don't know how to translate, but basically it's, you cannot hug someone with open arms, right? So if you're trying to encompass too much, you will be you won't be like grabbing the good opportunity strong enough. I don't know.
No, makes sense.
I felt you hugging me when you said that, Javi. So thank you. No, so I guess what I wanted to point out too, Nick, is that with the transaction here and with everything that's happening, it definitely seems as though you're moving into a new situation, right? You've always been somewhat nimble, right, in terms of wanting to maneuver through this crazy up and down roller coaster of an industry, right? And you've been in it from the beginning. So, with our last couple minutes here, what does this new venture mean for you specifically and for what you've built at KushCo, right? Do you still want to have that nimble approach? I mean, it sounds like you guys have already talked about ways that you're going to use economies of scale. You're using this transaction to reduce CapEx, which is great, so you have more to work with. But, what is the overall MO look like for you in this new joint venture?
Yeah, I mean, look, it's so exciting. I'm thinking about it all the time. Obviously, still a lot of work to do. We've got to get the deal closed. We've got to get integration right. There's a significant amount of cost saving opportunity, right, with synergies. We've got to nail that. And we've got to make this a very profitable company. We can also do acquisitions. We have an M&A pipeline as well. Think about it. We're going to be in prime position to acquire other ancillary companies. There's really not any other companies in our position in terms of what we do, right? This size, this scale, listed on NASDAQ, et cetera. So there's so much to think about. And I think the bigger challenge is really going to be, where do we focus and what do we say no to, rather than what do we say yes to? Because we know there's so much out there. But we're thinking of this as, truly an opportunity to deliver more value to our customers. There's a product portfolio that Greenlane's built under Paul and Gear that the KushCo customers are really interested in getting access to over time here. We also know that Greenlane's experience in CPG is perfect for leveraging vendor relationships like we have with Smoore/CCELL. Smoore is a $45 billion publicly traded company in Hong Kong with over 500 engineers, and they want to build products for the cannabis market, and Greenlane has that knowledge, right? What consumption devices are consumers looking to get into? And if we can leverage that relationship to bring new products to market, new innovation, right, that's really exciting as well. So we've got a lot of ideas. Obviously, we can't talk about it all right now as we're still going through the final stages before closing. Sure. But we're ready to go. We think that this just kind of immediately catapults us to that next level and puts us on scale with really anyone out there from a size and infrastructure standpoint and global reach. There's not a lot of companies that are global in this industry because, as you know, you have to set up significant infrastructure in every single market. But as an ancillary provider, we don't have to do that. So we can go global much quicker and take advantage of, like you said, we've always been nimble, been able to take advantage of opportunities as they come about. So, that's something that, again, we're going to stay laser focused on, is using that to our advantage, using our NASDAQ listing to our advantage, and, really becoming a highly profitable company. We know that's what investors are focused on, and we can do that by maximizing our margins on the company-owned brands and getting that scale on our traditional lower margin business that allows for meaningful EBITDA throughput, which we don't have today at our current scale.
Mm-hmm. I'm sure we'll have you, and Bill and Aaron on the show as soon as you close the merger. We'll want to hear all about the upcoming projects. I have one very, quick, dumb question before we close the show. I know we're a little bit over time, but what are you, like 33 years old? I was doing some math here. Maybe I'm a little bit off, but you're in your early 30s?
Yeah, I'm 35.
How do you feel about becoming potentially, let's say, just not to jinx it, but about becoming a NASDAQ CEO at age 35?
Well, I think it's a great honor. I'm excited. It's been a goal of mine. So, I'm honored. And, it's not just me, right? It takes a team. And I wouldn't be able to do anything that I do without the great team that we have here at KushCo. And I'm super excited about the team at Greenlane and being able to leverage them. They've made some phenomenal hires, actually, even recently. And so I don't think people really understand the caliber of management team that the combined company will have. And I'm going to leverage their expertise. It takes an army, as you guys know. And, I would put our team up against anybody. And at the end of the day, we've got certainly the stripes to prove it. KushCo being, over 10 years old in the cannabis industry, and Greenlane, before the merge, the two operators, Adam and Aaron, go back 15 years of operating in the cannabis industry.